You're listening to the Ottawa Homeboys podcast, your go-to source for Ottawa real estate and everything in between. Now, here are your hosts, Aboozar Sheikhi, Burton, and Ahmad Hassan. This podcast is about the real estate market in Ottawa and housing advice. But the advice may not apply to your situation. Contact the Homeboys or any licensed real estate professional for specific recommendations before you make decisions about your real estate needs.
Welcome to another episode of Ottawa Homeboys. I'm Aboozar Sheikhi with my man
Burton.
Burton,
nice to
and
be here.
Ahmad Hassan.
Hassan.
Welcome, and a special guest, Mike
Yeah, thanks for having
Napolitano. Did I get it right?
Yeah, you
You
did.
got it,
You
man.
did.
Nailed it.
Gotta say it with an Italian
Can't
accent.
get any more Italian than that.
Yeah,
That's like a 3-flavored ice cream, right?
we get that all the time.
Welcome.
Thank you.
And yeah, we're gonna talk about mortgages. Yeah, it's gonna be an interesting episode. I guess we'll just let Mike talk about himself. Let us know where you're coming from, and then we'll get into how mortgages and real estate really work side by side, right? So essential.
Yeah.
We rely so much on each other to make the deals go through as smoothly as possible. It's the idea. So yeah, go ahead.
Yeah. Well, thanks for having me. First off, I'm with Mortgage Brokers Ottawa, so a company my uncle works at, and we have a great relationship in the city with clients. So I've been there about 3-4 years. Newer in the industry. Came from a finance background. But not in kind of the mortgage world. So I was at the government prior, worked a couple of years there, and it was a good position. I just wasn't kind of fulfilled in what I was doing. So I came over to the mortgage world and kind of haven't looked back since. It's a great industry to be in, and every day is different. So
It is
lots,
that.
It's
going
great
on.
if you like the hustle as well, right? Like if
Yeah.
you wanted to change the pace from the government and doing something where I think, and like you said, it goes a lot hand in hand with how we work as agents.
Yeah.
Doing something like where you're truly in the trenches, doing everything you can for the clients is huge.
Yeah, it's nice you get to help people too, right? You guys as well. You get to help people buy their home or buy their investment property. It's a huge milestone
yeah.
for people, so it's very rewarding for that.
Cool. Excellent. Fantastic.
So I mean, before we get into the major topic of conversation and chat further about Mike and sort of what he does, how you guys been? How's your week, Ahmad, Aboozar? You guys been up to?
You go ahead.
Yeah. My week's been pretty productive. It's been a lot of catching up on old tasks and clearing, the way for the next month or so before the holidays. Looking forward to that, 3 weeks, 1 month off in December.
Seeing Christmas stuff up on the shelves already, wherever I'm going.
That's
Yeah.
very cool, man. Like the inside of people looking at how. Because for me, it's like I like it, but at the same time, just that rush goes away with the real estate. Right, everything is on hold, right?
Yeah.
And that's why we have to dance around the deals and stuff like that, right? Just to make sure it doesn't fall within that. But again, I'm trying to get better now.
Oh, you mean like to step away
Even
from the
long
business?
weekends, man. Yeah.
Yeah. Yeah.
Dreaded long weekends. It's like
There was a stretch, man, where I was
Yeah.
doing every deal of my year was on a long weekend.
Yeah.
It was like,
well, it's just mostly it's like. I think it's the closing and so on that you really have to watch
Yeah.
out for.
yeah, for sure.
But yeah, it's a given rule of thumb. Sometimes it's just a lot of deals get done on long weekends for the weirdest reasons, right? So, but yeah, I'm getting better with the holidays, man. So
Yeah, it's important, man. Like
yeah.
the balance
Yeah,
and
yeah.
like making sure, when you're on, right?
Yeah.
Like you're not wasting time.
Yeah.
But when you want time to your friends and family and just relax, like taking that time to decompress almost allows you to come back even stronger and even better in a way.
I think
Yeah.
it's also like a super important consideration and big challenge with this business, man. Of like, we work when other people don't work, right? Like how often you guys out on evenings and weekends for showings.
Yep.
I don't know about you guys, but that's sort of where it all falls on.
It's true. Yeah.
We're always
So
on,
you gotta,
basically.
You do,
We're always on.
have
Yeah.
to focus a bit on yourself and
Yeah.
be able to turn on that pause switch. And like, I mean, having a support system like you guys, like I can't count the amount of times you've helped me with something, same to you. And vice versa, I think is
Yeah,
huge.
absolutely. Yeah.
Yeah. For sure. How about you guys?
Dan?
It's been good, man. Been good. Been a busy week so far. Kind of in the trenches today. Just telling you guys sort of what's going on.
Yeah, busy day.
This guy's on the road all day today.
From Richmond to downtown to Orleans to Cornwall. Going to be doing 10 showings in the meantime. So.
The amount of kilometers he's put on this car, man, like I didn't even want to know. Is it a lease?
It is. Yeah, I got to figure
I
it out.
hope you have like 40,000 kilometers a year on that thing, because
If you're my sales guy from Delore Bank Mazda, can you reach out to me? Can we talk?
or maybe
about
we
this?
can feature him on the one of the podcast
Yeah, give me
episodes to get the
the-
discount, man.
Please,
Something.
bro, please. Anybody in car sales that's watching, listening to this, help me out.
You
here,
really
guys.
have to watch it. The miles you put on initially,
yeah.
especially with lease. I mean, the write-off is the idea, but the amount of you don't know where you're going next, right? So now you're pulled towards that area, and it is what it is. The client wants it, and
Mazda's fantastic for that. So I don't know if any of you guys are in the market for a new car anytime soon, but if you do go with a lease, like I got 24,000 kilometers a year from Mazda, and I'm making every little bit of that count. So.
awesome. Because there you go. That was a Mazda advertisement, so that he gets the freebies on the kilometers.
If
man.
Mazda
He's
can
really
reach out
trying
to us
here.
about this.
God.
No, everything's good. A lot of it just fell on today. I did have a listing come up earlier this week. That's the place in North Gore I've been telling you guys about.
Nice.
Good traction on it so far. Shouldn't be too long until we get new tenants in there.
Not too many places get rented out there, you were saying, eh?
Man, like had to go back over a year just for a decent
Yeah, the
approval
comparisons,
for
the
this.
comps are really tough, I think.
There's just it's
like
just an area where there's not a lot of rental stuff that comes up.
Mm-hmm.
So I'm getting a lot of inquiries from people that have been in the area for a while. I do think it would cater nicely towards people that want a little bit more space outside the city. Like I think there's the square footage and features and value that it all has going for it. You just need to be okay with the drive because it's probably about 50 minutes to get downtown from
Yeah.
there.
Yeah.
And then I might have something coming up next week as well too that I'll share more about then. So,
Cool.
yeah, something
Ooh.
exciting.
Ooh,
Yeah, let's see. Gotta get everything signed before I say anything, right?
good stuff.
How about
Yeah, rentals, dealing with that, rental listings, and a couple of buyers right now, but it's just the mortgage qualifications that are key, right? I
Yeah.
mean, I have a person who's, there's a various range, right? He can afford up to, I would say right around the 1.3, 1.4,
Mhm.
as low as 700. So look at that range right there, right?
Yeah.
So the idea is to whether to buy it for yourself, spend more money. It's maybe a forever home sort of a thing. If you're not certain when you're gonna move or how long you're gonna stay, do I get something smaller? Perhaps 2 properties, make it into an investment as well. But those are all the challenges, right? Just
Yeah.
because he gets pre-qualified, even up to a qualification for his initial purchase of 1.3, doesn't mean that if he buys something at 800,000, they're gonna easily give him the remainder to buy a investment
Yeah,
property,
exactly.
right? Everything changes, right?
Mhm.
So you can get into that if you want, but that is the challenge that I talk to him, like, listen, like, we need to know what you're gonna do. You're gonna cash out stock, do it, get all the money sorted out so that we get that pre-approval, especially for a first-time home buyer, right? You want to take advantage of those, rebates and so on. And then we can do it. I mean, we still go to open houses. We can still see homes, which we're doing right now. But I think he will not be, again, mentally ready until that pre-approval is just right in front of him
Yeah.
to know exactly what he's looking at.
Yeah.
overall. So that's pretty much what I'm dealing with.
And that's like, when you say mentally ready, like that's a big part of, the challenges that we deal with as agents, right? It's, somebody might have the mindset or, they say, hey, I'm ready to purchase a home. But truth be told, there's so much that goes into that, including
Right.
mortgages, right? And
Yeah.
applying for it. And I mean, I've applied for mortgages before, and like one of the most cumbersome things to do is all the documentation you have to put together, right? And you have to go back and get letters of employment and get pay stubs. There's a lot to the process, and sometimes you start questioning, hey, do I really want to buy this?
Why
thing
am I
anymore?
even doing this? You want to have fun, or get a corporation and buy under a corporation?
Oh,
That is so
imagine.
fun. And you know how big my
Imagine.
file was the first? this big. I kid you not.
Oh my
On the
God.
desk of the bank's manager, I'm like chasing on closing day.
Yeah.
This is how thick that file
Wow.
was, and they're like, like, it is what it is, right?
That's crazy.
Yeah.
Well, I mean, on what you said, I mean, the pre-approval is one of the biggest parts of the process, right? And I think a mistake some people make is not getting fully pre-approved up front. People get pre-qualified. They might go to the bank where they fill out an application. The bank says, oh, you're pre-qualified up to this number. But, people aren't always truthful on the application. They might over-assume their income, right? If they're in an hourly position, they enter, let's say, 90,000 as an income, but the year before they earned 60,000.
Yeah.
Well, their 2-year average is actually 75,000, right? So, there's little scenarios like that. Debt is also a big one. So
New car, it's like, everything is, and I think even what
Killer.
you're saying is even better than what I mostly deal with.
Right.
Is that even repeat buyers, right? You would think that there's experience there, but it just people tend to forget, and
Yeah.
new home buyers, and it's just that they have it in their head that they're I don't know if it's that mortgage calculator
It's
online,
definitely the
yeah,
mortgage
and then
calculator.
this is what I can
exactly-
get it. So then you could get into that, and then it's like, did you just buy a $100,000 Navigator? Just yeah, 2 months ago. So so it's like, what do you mean so? That's like.
with like $1,000.
By the way,
month
you have to
payment.
sell it
Yeah.
if you want to buy that house. So
Yeah, I mean, and what kind of risks are involved with somebody, overreaching, right? Like
Right.
if they are only qualified for a 500K home, but they're looking for a 650K home, like,
Yeah.
right? Like, how are their bills looking? How are their finances building up, right? Like, it's a big risk when you're shooting for the stars when it comes to your purchase price.
I think one of the most important things to do is get connected with somebody like Mike early in the process, and just don't surprise yourself with those pre-qualification numbers, because they're always higher.
Yeah.
And not only are they always higher, I mean, even this year, in my specific experiences, I've had people reaching out saying, I'm good. And then you get the documents in front of Mike, and he says, it might not be good. You might need to do X, Y, and Z. Just because there are so many, important considerations when it comes to actually qualifying. Like, what sources of income are you tapping? How long have you been doing those sources, right? All that stuff.
Yeah. Well, that's the biggest one, I would say. I mean, look at a 2-year average. So a big process in what I do is, and I spoke to Dan about this before, is just educating the clients along the way, right? So kind of setting the expectations, going through what the process is, explaining the pros and cons of going into a fixed rate, going into a variable rate, putting the numbers in front of them, which is a big thing I do. I do budget sheets for the clients. So if they're pre-approved up to 550, I'll do like a 540K, a 520K, a 500K, different down payments. And, this outlines what's due at closing, what the monthly payment is. That gives them a lot of confidence.
And
right?
is that a lot of work? Because that's my thing, and I always recommend this. It's like go to your mortgage person and let them run different scenarios. I think that's part of the job, and I sometimes it's lost in translation. It's just whatever the case may be due to volume, and I know directly with banks that's even worse, right?
Yeah.
Just because their salary, I don't think there is commission involvement, and it's just the motivation might not be there. It's one, first come first serve sort of a thing.
Yeah.
And I feel like part of the job is like, listen, like run the different scenarios. I think you owe it, right, to the client overall to let them know what the options are. How can I maneuver in and out of different scenarios?
Yeah.
I mean, is that something difficult or too much to ask, or?
No, I think it's part of the job, right? Like, you want to take care of your clients. Whether you have 2 clients on the go, you have 15 clients on the go, you owe it to them to do all of the work for them, right? And this really helps them, because we have a lot of clients that come from the bank and they're putting their own budgets together. So I said, look, if everyone's coming with this, it's obviously a wide issue, right?
Yeah.
Why not do it ahead for the clients and give them that peace of mind? Because in a situation where you have an offer of, let's say, 500K, and maybe they come back and say, oh, it's a little low, we need to up the offer, they don't know what the monthly payment difference is if you go to 510, 515, 520. So I'm able to provide that for them so they know, okay, if we go to 520, my monthly payment is, 3120. Does that make sense based on your income? Is that something you can manage? So going over all of that with them, I think is a very key point. And look, it's their biggest liability, right? Buying a home. So it's also your biggest asset, but you want to make sure you're taken care of throughout the whole process.
So it sounds like there's one thing that we could sort of check down as like a benefit of going with the mortgage broker rather than the bank. And like you touched on it a little bit. I don't know. I'd say a lot of clients I work with start with one or the other, maybe not always both.
Yeah.
I think it's great to get a couple of opinions on who works best with you.
Yeah.
That's the bank. I get it, right? That's great. Do you find like a lot of people come to you asking like, when should I use a mortgage broker, or sort of what's the difference between using a mortgage broker and a bank?
Yeah, well, we get even some people that might come from the bank and say, hey, I got this rate from the bank. What can you offer? And the thing I always go into with the rates is it is very dependent on your situation, right? Because say you're someone that's in a home, you have a renewal coming up, and you're going to sign a 5-year term, but in those 5 years, you might move, right? You might upsize, you might downsize. Someone like that, the rate isn't really as valuable because you're going to have to break that mortgage.
Yeah.
Right? So one thing we do is kind of break it down for the clients if you do have to break. Personally, a variable is a great option, right? You just pay the 3 months interest and that's it. If you are going fixed, maybe look at a 3-year fixed. But if you are going to a 5, understanding what causes the penalties, right? So if you're breaking with a bank, they operate on posted rates. So say your rate is 4.8, but their posted rate is 5.8. They're calculating the interest rate differential on the posted rate. Okay, so the penalty on that is a lot higher compared to a monoline
The
bank.
discount you initially got, basically.
Exactly. So
What's a monoline bank?
So monoline is basically lenders that operate just on mortgages.
Okay.
So we have great ones we work with, and they do offer competitive rates, which is awesome.
Do you want to
And-
put a few examples of those out there too, Mike?
Yeah, so MCAN is a good one. MCAP is a big one as well. But the key with them is they operate the interest rate differential on your actual rate, right? So say you have 4.8, we use the same scenario, and the current rate is 4.3. They calculate based on that. So 0.5% difference comes to, let's use a scenario we had recently. It was around 500,000 mortgage. The penalty was 6,000, okay, on a monoline. If they had gone with a bank in that situation, the penalty sometimes is as high as triple. So it can be up to 18, 20,000 just on a penalty
Wow.
to break.
Yeah, that's big.
So it's a big difference.
And can you also, for the listeners' sake, differentiate between, first of all, define these lenders that you're just talking about? Because as soon as, it's not the big banks, it's like, what, am I getting a private mortgage? No.
Yeah.
If you can explain what this means, the other institutions you work with,
Yeah.
as well as expansion on what an A lender and what a B lender is, basically.
Yeah, so for the monolines you're looking for, like the MCAN, the
Yeah.
MCAP. Yeah, so those are big financial companies. Now, they're not credit unions, right? So these are reliable, trusting companies. They do a lot of volume, right? Because they'll get business from brokers across all of Canada. The States would have them as well. So they're doing a ton of business on that. But the other part, so A and B lenders, your A lenders is your banks and your monoline. So that's going to be your top lending. B lenders come in when it's alternative lending. So
And some of these A lenders could be B lenders.
yeah, most
Yeah.
of them are
Yeah.
for the most part. Yeah.
Right.
So the B lenders are typically, your Bruce Credit, your Business for Self, bank statement programs, investment properties. That's where B lenders can come in, and there's a lot of benefits to that side. But with them, you're paying the 1% lender fee, right, on your mortgage. So if you have a 500,000 mortgage, you are paying the 1% fee to use them. The interest rate is typically a little higher, but right now the gap is very small from an A to B lender. So For business for self, we're helping a lot of people with that. 12-month bank statements is a great program for commission workers. You can just look at your last 12 months. If you have a lot of write-offs, this is the perfect one for you to go in, right? Because your taxable income is obviously low. So, if you're writing off 30,000 and your taxable income's 40K, well, you can't qualify for much, right? So there's a lot of benefits to using them.
I imagine there's a lot of opportunities with these guys, just not even for an entire mortgage, but potentially, like you mentioned, with an investment, maybe you get a mortgage for A, and then you get a bit more mortgage with B lender. Just if you need to get across the line.
Can you do two? Like, does that happen?
Yeah.
Or when would you use a B lender in that case?
So, it'd be lender. I mean, you need 20%, right? So that's the first thing. You can't go under 20% on the B side.
So we're looking at a fresh mortgage with a B lender. So the qualification, and we do, sorry for cutting it, just to explain here, it's beneficial for us, I feel, because times are hard and we're looking at a whole new world of qualifications, right?
Yeah.
A lot of people cannot afford anymore. Families not there to help out.
And also, there's so many ways of making money these days. Like, I feel like, the traditional...
Exactly.
Like the 12 months bank statement.
Exactly.
Right.
So essentially, B lending, again, I want to go back to what I indicated, not to say that the B lending was a bad thing, rather how people perceive different lenders. But essentially, B lending, I think, comes to play, and it is important for people who want to get into real estate. And based on that, you can go ahead and, as far as the qualifications go for something like
Yeah,
that.
well, I'll even use a real life scenario from someone we just got. He's a teacher that works contract, right? So he's at all these different schools. They pay him through contract, so it's on him to kind of claim what taxes he wants to claim. And, he spoke to me about his income. It was great. And then I asked him, what are you putting down on your taxes? And he said, well, I'm claiming, it was like 25,000. So with that income, you can't really get qualified for much of a mortgage on that, right? So you're writing off a lot of your income. So for him, this program works out perfect. I mean, it's very dependent based, right? So some people it works out great for. If you can go on the A side, even better.
Absolutely.
So it just gives
or is there an option to switch? So this is like, as soon as you mention B, it's like, oh my God, like the interest rates are obviously higher.
Yeah.
There's a initial fee that you have to pay. I'm like, why would I do something? But the fact is, get your foot in the door.
Yeah.
Get qualified, right? Lenders treat you differently when you have history with them. And then there's always a chance of switching over to a traditional mortgage. And this way, I feel like that nightmare situation, the initial pushback is like, listen, deal with it for a year. And essentially, there's potentially you can
Like switch into an
switch,
A?
yeah.
Like you said that you have to have 20% to qualify for a B, right?
Yeah.
So what if you don't qualify for an A and you don't have 20%? What happens in that situation?
Well, you look at private, but private's very much the same, right? You need that 20%. So this goes back to, and now it's very less common now, right? I'm sure you guys saw it a lot during COVID where there was no financing conditions.
Yeah.
People ran into issues with that, right? So again, this goes back to kind of working with someone you trust and is doing the work up front because, at that point, say you have 10% down, you can't go on the A side, you're out of luck, right?
Oh,
So,
you just can't buy.
Yeah.
So
Most likely.
I guess on this topic of conversation, it's a good question to ask as well. Like, for you as a mortgage broker, like what tips or tricks would you recommend to somebody that might be looking to buy a year from now or maybe 5 years from now? Are there certain accounts you'd recommend, certain practices you'd recommend? Like, what would that look like?
Yeah, for sure. I think there's a lot of government benefits, right? We see the FHSA, the RRSP, TFSA, getting invested in those, but also strategically.
If you want to break those down even further, Mike, like if I don't know what an FHSA is, what is that and how does that work?
Yeah, so basically that one's your first home savings account. So say you open an account today, you get $16,000 of room, and starting next calendar year, you'll get another $8,000. So you'd have $24,000. All of this you can put into your home. So you put into the account when you have an accepted offer on the home, You sign a tax form for that, stating, you know, you're pulling the funds for the home, and you'll get tax rebates on this. And it's a great program to use. Honestly, it's one of the best ones the government have put in. So that's always my top recommendation for people, is that one. But outside of that, kind of just budgeting ahead, right? If you're in a position where, you know, you're going to switch jobs, letting them know ahead of time, hey, as long as you're in the same industry, we can use the 2-year average for that. But if you're going to plan on going from, let's say, a mechanic to, you know, a salesman in the span of a year, but you want to buy, understanding you need a 2-year average if you're not guaranteed your income in that. So planning ahead for that, down payment, and just kind of saving where you can is the big ones, I'd say. So we try to work with people to kind of get ahead for that.
Very cool. I mean, there's hope. I mean, I think I was talking to a neighbor of mine where it's the teenagers just spends the money, right? The concept of saving, it's like what's the point? Because they're smarter now. They see things, right? They see the prices.
You were like that too, buddy, I'm sure.
Sometimes I wish, man. And that's it, you know. It's like, but I think being savvy still plays, right? You still play that game. It's just you just need to know. I mean, it needs to be taught. I think in schools more than the curriculum they teach. Right.
Financial literacy is huge. So knowing like what you're spending compared to how much you're earning.
And I think kids more they gravitate towards that because my kid's like he's in. Grade 5 now, and that's what they're doing. They're getting to that the percentage of interest and the money, man. Like the blood is flow. Like he's picking that up more than anything else, right?
Yeah.
So, cool. They gravitate towards it just because of the use. It's a real life use at times, which will most likely benefit them. More than anything else, right? So.
Exactly. I think you can also be financially literate and know your numbers and know what you can do to make more and save more. And then I think using the programs like Mike's been chatting about, like any source of, I guess, free money you can get right now. I mean, leverage that, right? Like the FHSA, you can invest with that as well, right? Yeah,
well, that's the down payment account. Okay. So you can do it through your TFSA, right, which is tax-free.
Yeah.
RRSP, similar thing through your TFSA. So, look, if you can avoid tax and you're getting rebates, we pay enough taxes as is, right? Exactly. So utilize those to your benefit.
Yeah. So another situation for you here, Mike. So we've been chatting about like what it would take to get into the market a lot. What about somebody who's already got their first home? Maybe they've been there 5 years and they're looking at a renewal, or selling their home, right, and then getting into something else. Yeah. Are there pretty common tips of advice that you could give to somebody that might be looking to sell and get a new place, or even just for somebody that's looking to renew, and what should they do?
Well, so the first one for renewals, we see a lot of it is, people have obtained debt, right, over, the last couple of years. Everything's...
Broke boy.
What? Well, stuff's gotten expensive, right? You go to the grocery store, you get a few things. Where'd
that come from?
You just have to throw the chirp in there.
Cut that out.
Like a left jab, man.
Yeah, that's funny.
Get ready, man. Get back at him.
Yeah, man. Don't worry.
Your
time will come. Don't you worry.
Sorry, boys. I gotta go to my next thing.
What was the end part?
What was the question?
I was wondering, Mike, like what tips you would give to somebody that's first looking to renew and maybe stay put where they are, or second, somebody that's already owning their current home and might be looking to sell in the near future, and what they should consider mortgage-wise going from place A to place B.
Yeah, so for, I guess we'll do the renewal first. For that, debt has came up, obviously, for some people. So it could be anyone, right? So in that situation, we're just looking at the overall profile, right? So maybe they bought a car in the last few years, or they've incurred credit card debt or something like that. You have equity in the home where you're paying a low interest rate on. So utilizing the equity you have to kind of pay off these debts, where a credit card is, 20%, car payments are now 7%, 8%. Like, using your equity, pay those off, be debt free on that side of things, and this lowers your monthly payments big time, right? So I think that's a big one we're seeing recently, is definitely refis on those. But for the other situation, if you're looking to upsize, same as before, make sure you have kind of all your numbers there, right? So understand, if I sell the home at this price, this is what I'm looking at. What down payment am I comfortable doing on this new home? What would the monthly payments be? Going through all of that, because I really do think clarity is everything.
And it's
for
not as
clients.
easy as before. The first
Yeah,
time was
for
much
sure.
easier, much simpler.
for
It
sure.
will not be the same as before.
Yeah.
So there's much more. So getting a pre-approval for a second or third property, it's not going to be easy. So I can't even, like, sometimes I say, have you done your homework? That's how I phrase it, because to even say that, where's your pre-approval? It's like, as a professional, you can't be giving out pre-approvals like that. There's so many elements involved here.
So there's like misconception with
Absolutely.
sellers.
I think it's
you
just
know, they think,
have you done
Yeah.
your homework? Have you been, are you qualified, right? It's like that pre-approval document might mean nothing at the end of the day. Even if, can you even give that when the person has 3 properties for the 4th? It's like, how do you come up with that?
Yeah.
There's so many elements, moving parts, right? So
Yeah.
Especially in that, and people don't account for the fees as well, right?
Yeah.
So down payment, they don't account for closing costs, right? They think, oh, it's my down payment. Well,
land
There's a
transfer
lot of-
tax and it's a lot
lawyer
more, yeah.
fees, your tax on that. So and same with selling a home, right? You have to pay the realtor fees. You sell the home for $500,000, you don't get the $500,000, right? So just going through all these numbers.
Money well spent, by the way.
Well said, buddy. I was waiting for somebody to say something there.
It is worth it. It is worth it. You do get top dollar when you use, especially a good realtor.
Especially
so.
the Ottawa Homeboys podcast.
Exactly.
visit our website.
Yeah, so just all of that, I think, all comes back to clarity, peace of mind. You have all your numbers in place. It makes the transaction good, not just for the client, but for you guys as well, right? I'm sure all you guys have sent deals over to the bank, and you have trouble hearing from them, or there's delays, or they didn't get pre-qualified.
It's definitely dependent. I mean, I think I've seen 2 different types of bank agents. One that kind of runs on the standard like bonus structure, or like they don't really have too much skin in the game to get the approval. But I met up with a buddy of mine who I went to high school with, and he works for Scotia, and he literally described his job like he was essentially a mortgage agent that worked for the bank. Like he's working around
I
the
think
clock.
there's like 2 types, isn't it?
There
I think
is.
there's one salary, one that will be like commission based. From my
He was
understanding.
100%
I
commission
see.
based.
Okay.
So like, he's like, hey, if you need something done on the weekends, like I'm your guy,
Yeah.
kind of deal. And, when I first started in the job, I kind of had a misconception of the 2 different roles. I think you just have to find the right person who's a mortgage agent and the right person who's...
The team is everything. I
Big
think
time.
from inspectors to mortgage individual, to your realtor, to your engineer, to your so and so. I think
Yeah.
it's essential to have the right
The
team.
contacts are what's really important, right?
Yeah, to be in sync, right? To with your mortgage broker as well. And I think some of the agents, especially getting into the business, it's like you do not let the deal go. They know what they're doing, most likely, hopefully, but the realtor and the mortgage specialist need to be in sync.
Oh, 100%.
What's going on? Let me know.
Yeah.
Every step of the way.
Anything
'cause,
that goes wrong
Yeah.
at any step,
Yeah.
through us, through the mortgage agent, if we drop the ball and can't organize a proper inspection on time, you know what I mean? Like,
Yeah.
it all comes
Ripple,
together.
ripple,
Yeah.
So what do you think separates a good mortgage agent from a bad mortgage agent? You could give us...
There is no such a thing as a bad mortgage agent there.
Well said. Mike. Well said. But what would be some qualities that you guys would look for anybody listening that wants to
Yeah.
reach out to Mike?
Yeah. I mean, I want somebody who's responsive.
Yeah.
Definitely can respond, on a timely manner. Like, if I'm messaging you on a 8 or 9 p.m. at night and, you got stuff to do, that's fine. I'm not going to expect that. But hey, if we're working during business hours and I don't hear from you for like 5, 6, 7 hours, like I start to question a little bit.
And don't glorify, please. I beg you, if there's any mortgage specialist, to do not glorify the situation.
What do you
get
mean?
the client. There's a lot of
Like over promises, you mean?
over promises.
Okay.
Especially in like events that they set up in like trade shows or whatever, home shows or so on, and then the person comes in, oh, I'll get you this, I'll get you that, or through advertising, whatever the case is, and this person told me I'm qualified for whatever, right?
Yeah.
I'm like, do you have it on paper? No.
Yeah.
Verbally, and then you get those promises. The idea is implanted in their brain, and it's like, I can reach this price bracket now because this person told me. And what a disappointment when we go through this, if we're not careful, do the offer process, and then what happened to that person, I can't even get hold of them anymore, sort of a thing, right?
Yeah.
Why? Because they made the promises they can't upkeep. So
I had a conversation with another mortgage agent friend of mine, and his big problem that he's running into was, I'm always getting beat out by the bank for his rates. And I think that's a very it's very common. People are shopping for the discount, they're shopping for the cheaper rate. But if you've created such an amazing level of service with that client that it goes away from the value, because at the end of the day, if they choose to work with you, the idea is you're their agent for life. You want to have that relationship like for the rest of your life, or any sort of future issues, right? You think if they went with somebody else and then they come back crawling, on the second or third transaction, like how's that relationship going to stand? It's going to be pretty muggy, right? So I think if no matter what sector you're in, if you're able to really provide top-notch service to that client, I think that's what really goes a long way.
And then the transparency, right? Even myself, like I've gone mortgage before, like I work with mortgage brokers, but it gets to a point where what the bank is offering me, and I talk to them, and I'm like, listen, like this is what the bank is reaching out to me. And because of that transparency, at times they're like, you know what, just go with it.
Exactly.
At the end of the day, it's the client's, interest in mind, I guess. That's pretty much what we come down to.
That's what any good broker should be doing, right? Is you're looking out for the client, and that's something my uncle was very big on teaching me on, was take care of the client first, right?
Who's your uncle?
Frank. Some might know, some might not know. But again, you made a great point on, I think brokers that are losing deals to rate, sure, it can happen sometimes, but you provide a great service to someone, they're not going to leave you for 10 bips, 15 bips, right? You build that trust with them, and they'll
Got
be
to ask as well, just on the topic of rates, what are you seeing right now for fixed and variable, and are you seeing anybody leaning towards one or the other more often, and what do you think are going to happen with rates over the next year or so?
Well, rates are a crazy topic right now. I mean, we just had the rate drop, which was good, didn't have much effect on buyers or anything like that, but it's good relief for people that have mortgages right now, I think. But in terms of where fixed rates are now, variable is lower. So if you're buying an insured, you're looking at in the range 3.7, 3.8 of a starting point. Fixed rates around 4% or so, in that ballpark. So it depends on your down payment, what your rate is, right? If you're in an insured mortgage, that's under 20%. Uninsured is over 20%, so you pay a little.
Just the high ratio factor, right?
Yeah, exactly. So a little higher for that.
On that specific topic, I got a quick question just to interject here as well. Do you typically recommend to folks to save a little bit longer to get the uninsured mortgage, or would you recommend somebody breaking in with a 5% down and just going and dealing with the insurance?
I think the same thing on everything else is, you buy when you're ready to buy, right? If you're paying the CMHC insurance, I would rather see someone get into the market, than rent.
Exactly.
Ask me then.
Aboozar, what's your thoughts on this?
I think they should buy now, because there's no way when the prices start climbing, you can never catch the market. And that's one of the conversations I have with my buyers, regardless of whether you're in the tech industry, I don't care.
Yeah.
Okay.
You will never get that bonus or the increase in your wages to be able to
it's
catch
it's
up
funny
with the
because
market.
it's funny because I think people think it's like a sales tactic, right? It's like,
I-
hey, you
I've
gotta get
seen-
into the
I've
market
seen,
now.
I've seen people
But it's
being
facts.
pushed out.
100%
Yeah.
agree with this.
Yeah.
Like, I think, I mean, the numbers for Ottawa, aside from the whole COVID, like if you bought before COVID and then saw that, that's a whole different story. But just average appreciation freehold properties is like 3% a year,
Yeah.
right? So if you waited 5 years,
Yeah.
you actually spent more than just dealing with, what is it, like 1.5% on the mortgage
And that's, we're
insurance?
talking normal. This is normal what he's talking
Exactly.
about. Like the insanity we saw in COVID, hopefully it won't happen again just because of the, it was just insane.
Yeah.
You know,
Yeah.
regardless of what was happening, it was just insane. And
Yeah.
you just literally, week by week, you're sitting there, okay, Mr. Buyer, what can you do? A single home, single car garage. A week goes by. It's like, no, we got to take like an end unit now. 2 weeks. You're looking at maybe a 3-story, mid unit, and then it's a gone. It's like everything is, and not that to scare people that this is how it's going to be.
No, yeah.
It's inevitable.
Yeah.
Ottawa is the capital. There's a lot of growth. Take a look at the stats and the population growth. These are all facts, and based on those things, I think the sooner the better.
Plus, the
So-
fundamentals make sense at the end of the day as well, right? Like if you could have got in, rates right now are even okay.
It's not bad. I
historically,
mean,
right?
it's,
So
yeah.
use that 5 years where you weren't saving but you were paying rent,
Right.
and put that portion towards your mortgage. The fundamentals of home ownership are that we want prices to increase because it's an investment. We want to see us do well on our investment.
Yeah.
And we want to pay down the mortgage at the same time so that balance keeps growing.
Right.
Right? Like I think that 1.5% that you spent on the mortgage insurance would be worth it almost each time.
Yeah.
As long as you were
Yeah.
ready with
Well,
the
your
funds.
mortgage insurance. So, if you're doing 5% down, you would start at 4%,
Okay.
and then it goes down 3.6, I believe, and then 3.1, 20, 15, and then 10. So depending on what your down payment is, that's what your mortgage insurance is. But we do calculations on rent versus buy calculation. So we kind of run, your rent is this, if you buy this is kind of what it would be. And that kind of shows the number for them. So a lot of people now, you're renting a 2-bedroom, it's $2,500, right? If you're gonna buy, let's say a smaller townhome or a stacked townhome, your mortgage payment is going to be slightly higher, $2,700, but over the term you're getting what, 40, 50,000 in principal plus the equity in the home each year. So
Appreciation, absolutely. Yeah, I mean,
just, I guess, giving the clients those numbers.
it's a long game, right? I mean, you can
Yeah.
always sit down and argue, rent versus buy, and some people can argue against the purchase side, but that's a short span of time. But if you look in long-term investment sense, I think it's the best thing to go. Do you have we have to wrap it up.
Yeah, awesome. One more quick question and then we'll chat something we got. So speaking long term, what are you thinking rates wise? Like what are you seeing right now with the trends? What's that looking like?
Well, where rates are now is pretty close to where we're going to be in the near future, right? There's, some economists that predict 2 rate cuts. Some predict as early as next year rates might spike up a bit.
So it's normalized, we can say.
Yeah, I'd
Yeah.
say it's very balanced
Yeah,
right
awesome.
now. So, whether you're going a fixed or variable, like you said, most people are looking fixed now because they're kind of scared of the variable where it's going to go.
Right.
But
Yeah.
again, if they're going to feel more comfortable in a fixed rate, then stay in the fixed rate, right? You don't want people losing sleep if the variable goes up
Yeah.
0.25. So
It's personal preference and the risk tolerance. Yeah.
So we have something exciting for our 5 viewers, hopefully 6 by now.
And he has to.
Mike, did you?
I thought,
Every episode, yes.
Did
I thought he would
wanna-
increase it.
So do you have anything that you want to share with us, Mike, and maybe give it a little inside scoop to our viewers on?
Yeah, so we're gonna give away 2 cents tickets to a game in December.
Awesome.
We'll
Those are
we'll announce the
100%
date
for free.
for free as well. Yeah, we'll discuss the details on how to apply, but we just want to be able to give back and
Awesome.
support everyone. So
Very cool, very cool. And hope to see you in the in the future.
Yeah.
Hopefully you can
for
join
sure.
us. It was a pleasure having you, and it was our 10th episode. We didn't even celebrate it that, so we're gonna do a milestone from now on. This is the 11th episode. Every 10 we're gonna celebrate, man. Bring a
do it.
little cupcake and
Yeah, let's
do
do
the
it.
whole shebang. Huh?
We do a shot of whiskey too.
Then see, that's
Sorry,
the
I had to
hundred.
go
We're
there.
gonna edit that.
When we surpass the 5 or 6, listeners. All right, guys. Good seeing you, and
Great times.
until the next episode.
Thanks for joining
Take it
us,
easy.
Mike.
Yeah, thanks for having me.
All the
Take
best,
care.
guys.
All the
Awesome.
best. Take care.